Good afternoon, traders. Welcome to the More Analytics Afternoon Energy podcast for February 26th, going into the 27th. We're going to start off with the natural gas. Have to maintain gap lower on the day. Maintain gap higher tomorrow. We'll leave a minor bullish reversal below. Okay, the failure below 383. I brought in $3.8 of pressure coming into today, and a little bit more than that, down to 277.50. And I warned that there's a couple other bearish calls in here also. The trade below 291.60. Warned the pressure also from the pullback right here. And I said at the same time, we may be in the last stretch of the move down from the highs with possible exhaustion at 279.20 to 74 and lower. And we're holding the 279.20 to 74 with a 277.50 low and starting to bounce a bit here. If we take that area out, we're likely to head down to the next one down here at 269.40 to 268.50. We trade back above this formation right here. That's going to warrant a decent strength. That's going to come in at 292.90 plus 0.4 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. Okay, and the crude oil, some pretty sizable swings in here. Okay. So before I jump into the crude, actually, I'm just going to back up. Just a reminder, the June D spread, which is off in a harbinger, which you're going to see in the rest of the complex, held exhaustion above here, fell below this formation up here at right around 285. It's been coming off ever since. Fell below this formation, but then came back above it, negating this formation. But we did not take out the lower formation yet. Decent trade above this formation above. That's going to warrant a decent strength. That's going to come in at 256. Minus 0.5 a tick per hour starting at 6 o'clock p.m. Eastern Standard Time. Also, a reminder as well, the heating oil had broken below this major formation here. So it's kind of small, showing you on here. Broke below this major formation, pulled back up to it, but did not negate it and rolled over again. So this is still bearish in general. The heat crack turned bearish though. We broke above this formation and failed back down through it. So we're pulling back up a little bit, but this is bearish right in here, unless we were to take that out on the upside decently, which means that if this is going to roll over to the downside, the heat may lead it. Okay, I'm going to jump back into the crude. All right. This morning, I'm not going to go all the things that are on hold, go over all the things that are on hold. We held exhaustion up here at 67.42 to 58 with a 67.28 high, rolled over to 63.60. Then we fell below this formation at 65.88. Also broke below the 65.46 to 45 area. And then we broke below 64.33, but traded back above it, negating that bearishness. This line is no longer of any use, so taking it out of here. Then we broke back above this formation, which I said would renew bullishness. That was this call right here above 65.44 to 45. And then additionally above, above 65.02, and then above 65.44 to 45. This break above 66.13 was not enough of a break to be a decent break. The volatility had expanded at that point on the day. A decent break in there is going to be 59 ticks, but it's going to be 66 ticks overnight. So right here, we're bullish. And a decent break above this line actually would not be bullish anyway. So that should be taken out of there. But we are bullish above these lines. If we were to fail back below either of these decently, that would just simply negate the bullishness above them. Maintain gap lower tomorrow. We'll leave a medium bearish reversal above. Okay, and in the unleaded gasoline or RBOB, I'm not going to go over the higher time frame stuff, but we had failed below this formation right in here. That came in around 224.20 or whatever, came off down to 221.53 and then broke back above it and rallied up to 227.80, where we held this trend line up here and then rolled back over again. If we were to fail back down through that line decently, that's going to warrant a decent pressure. That's going to come in at 224.56 plus 3 per hour starting at 6 o'clock p.m. Eastern Standard Time. A decent penetration in there is going to be 139 ticks overnight. And the heating oil, just as a point of interest, the April heating oil ran up, made new highs, but the March did not. It left a minor bearish reversal above, tested up above here, and rolled over a bit. It's coming off tomorrow anyway, but okay. And then in the April, again, I said the solid failure back below 269.36 to 90. In the March now warrants a solid pressure likely for days. Solid trade back above, where that comes in at 269.28 to 85. Solid trade back above that will warrant solid strength again. Remember that is rolling over into the April tomorrow. Now we did break above this minor formation right here, and we rallied up. This failure back below was not enough of a failure to be a decent failure, as we had volatility expand on the day. A decent penetration in there overnight is going to be 310 ticks. Maintain gap lower in there tomorrow would be bearish. A decent failure back below this line is going to be bearish as well. That's going to come in at 253.78. Minus 3 per hour starting at 6 o'clock p.m. A further break below this formation right here, which is going to come in at 249.46. Plus 5.3 per hour starting at 6 o'clock p.m. That will warrant a decent pressure for 8 cents plus based off a well-formed formation. If we break below there decently and back up through it decently, look for decent short covering to come in. In the Brent, maintain gap lower tomorrow. We'll leave a medium bearish reversal above. In the Brent, I'm not going to go over all the higher time frame stuff. I said that today has a good likelihood of seeing range expansion, which we obviously saw today. The trade below 70.33 to 28, I said now warrants a decent pressure. We saw decent pressure down here to 69.16 before holding this lower line and then breaking back above that line above, negating the bearish bias below it. This line is no longer useful, so we're taking it out of there. I would note that we held this general exhaustion area here a third time before rolling over. If we were to fail below the line below, which comes in at 69.32, plus 1.2 per hour starting at 8 o'clock p.m., that's going to warrant a decent pressure to the tune of at least $3. Break below there decently and back up through it decently. Look for decent short covering to come in. A maintain gap lower on the gas oil is going to leave a minor bearish reversal above. And in the gas oil, the trade above, I'm not going to go over all the higher time frame stuff, but I would note that the trade above 709.25 projects this upward 50 minimum, 170 plus maximum. We detained 26.5 of that coming in today, and then a little bit more up to the 742.25 area. We also broke above this formation, which came in at 726.06. And then ran up to 742.25. If we were to fail back down through that formation, which is going to come in at 724.87 minus 15 per hour starting at 8 o'clock p.m. Eastern Standard Time, that'll warrant decent pressure. A further solid break below this formation right here, which is going to come in at 708.62. Basically comes in at 708.75 to 708.50. Solid break below there, we should bring in solid pressure. There is no cadence tonight really, but in general, the RBOB would be the strongest of the three. And I would say the heating oil to crude would be equally weak. But I think the heating oil will show more weakness because it fell back down through that formation I talked about earlier. Okay, thank you for watching, and I'll see you on tomorrow's podcast.